Welcome and good afternoon, everyone. Thank you for joining us on today's webinar. I am Nikita Singhal from Team Vectel, welcoming you to the session on preparation of GSTR 9 and 9C for financial year 21-22. Vectel as we are living in the era of digitalization, where everything from the simple to complex demanded eases with technology, here is why Vectel believes in making it a way of life. We are India's one of the leading e-compliance companies, known for its compliance management, office management, and HR management solutions. We have incorporated a knowledge academy as well, where you can do all your learnings by opting for self-paced courses, staying in line with the blogs, keeping pace with webinars, etc. Today, we are presenting a webinar on preparation of GSTR 9 and 9C for financial year 21 and 22 in association with AFTP, presented by our renowned speaker, CA Tushar Agarwal. AFTP vision is to provide qualified opportunities to members designed to enhance their professional development, continuing education, peer-to-peer networking, and ongoing member benefits in order to improve services to our respective clientele. So let me introduce you to our speaker of the day. As I have told you, our today's speaker is CA Tushar Agarwal. He is co-founder Tattvam Advisors. He has more than 10 years of experience in indirect taxation and has worked for more than 8 years with Lakshman Kumaran and Sridharan attorneys. He was also deployed by GSTN for GST implementation and has worked closely with government officials. He has worked extensively with the Government of India, GST, in designing GST returns, audits, and other formats. So just a little housekeeping before we get started. If you have any questions during the webinar, please type them in the chat box. We will take the same at the end of the webinar. Now, without further ado, we will turn the time over to our speaker, CA Tushar Agarwal, sir. So, can we please start our session?
Yes, thank you so much, Nikita. I'm just sharing my screen. Good evening, friends. At the outset, I would like to thank Vectel and AFTP for giving this opportunity. Friends, the purpose of today's session is to decode GSTR 9 and 9C. At the outset, I would like to clarify that preparation of GSTR 9 and 9C is not merely an compliance activity. Rather, it is an opportunity by virtue of which you can go back, see your data of the financial year 21-22, do all your reconciliations, do all your health checkup, and present the data in a correct format in GSTR 9 and 9C if any mistake has been undertaken. Further, recently, government has also extended the time limit for availment of credit, say for financial year 21-22. Now you can avail the credit till October 3B return period, which you have to file maximum by 30th of November. Similarly, GST credit notes can be issued till October 3B. Similarly, rectification can be undertaken till the October return period. So effectively, you have been given one more tax period, 1 month more tax period to undertake all the reconciliations and rectify the returns, whatever mistakes you have undertaken for 21-22. So whenever we are talking about preparation of 9 and 9C, one of the important aspects is obviously to do outward and inward reconciliations. And during that reconciliation, if there is any gap, still you have the time limit till October 3B period to rectify the same. Apart from that, we should also undertake a health checkup of all our business transaction, whether output or input, and see if there is any mistake. I should rectify the same now. So it is an opportunity which is given to us. Now, what we will do is that in our next part of the session, we will start the discussion on GSTR 9 and 9C. GSTR 9, it consists of 6 parts, and 19 reporting heads. First, part 1, basic details, table 1 to 3. Then we have outward details in table number 4 and 5. Table number 6 and 8 talks about input tax credit. Table number 9 deals with your tax payments, whatever tax you have paid. Table number 10 to 14, it captures transaction related to 21-22, which you have reported in financial year 22-23. Then we have table number 15 to 19, which talks about other details. So in GSTR 9, we have total 19 reporting heads, which is divided into 6 parts. So whenever we are preparing GSTR 9, it is not that we have to prepare the same sequentially, table number 1, 2, 3, 4, 5, 6. Rather, we have to divide and our approach into 3 parts. First is my outward details. So we should always prepare our outward details, GSTR 9 and 9C together. Then is our inward details, and then is the miscellaneous items. When I talk about the output, in output, table number 4, 5, 10, 11, it plays a very, very important role. Table number 4, 5, 10, 11. 4, 5 deals with the transactions of financial year 21-22. I'm just giving a overview so that we all are on the same page.
Tushar sir, just a minute. Some of our participants are messaging that your voice is like not audible, but it is like properly audible to us. So please, the participants who are facing this issue, please check. Like you can rejoin or check your network connection, or you can go to our YouTube like live video, and there you can join. Sir, you can continue. Thank you.
Okay. And some participants are also talking about PPT not shown. Should I share the PPT again, or it's okay? It's visible.
It is visible to us. I think there is some network issue with them.
Okay.
So all those participants can join us on our YouTube channel, and there they can see like join our webinar. Thank you.
So what I was discussing was the approach to file GSTR 9. It is not that I have to prepare GSTR 9 sequentially, table number 1, 2, 3, 4, 5, 6. I need to divide them into 3 parts, output part, input part, and then the remaining. When we talk about the output part, in output table number 4, 5, 10, 11 merits consideration. Table number 4 and 5, it captures transaction related to 21-22, which you have reported in 21-22 itself. Whereas table number 10-11 captures transactions related to 21-22, but the same has been reported in 22-23. So that is the difference. 4-5 captures transactions related to 21-22, which is reported in 21-22 only. Whereas 10 and 11 captures those transactions which pertains to 21-22, but are recorded in financial year 22-23. So what we will do now is study what is the table number 4, 5, 10, 11, what are the mandatory fields, what are the optional fields, and thereafter we will drill down into 9C, relevant tables of output table in 9C, and then we will drill down into the case studies, various practical case studies which all the taxpayers are facing. Table number 4, it captures details of advances, inward and outward supplies made during the financial year on which tax is payable. 4.8 refers to B2C transaction. 4B refers to my B2B transactions. Then I have export on payment of tax. Then I have supplies to SZ on payment of tax. Then I have deemed export transaction on I pay tax. So whatever transaction on which I have paid the tax, I have to report the same in table number 4. And in table number 4, that same is divided various transaction wise, B2C, B2B, SEZ, export, deemed export, advance, etc. Further, we have 4IJKL. It talks about credit notes, debit notes. Either you can show the debit notes and credit notes separately, or you can club them together along with this. Like B2B, you can show tax invoice, credit note, debit note, the net of figure. Similarly, in 4C, 4D, 4E, you can show net of credit note and net of debit notes. Then we have 4F. 4F refers to advances on which tax has been paid, but invoices has not been issued. As of now, the tax on advances is payable only in case of services. So if you have received an advance in respect of a service, say in the month of March 2022, and invoice is issued later on, in that situation, you have to report the same in table number 4F. And all these are mandatory fields. Then we have 4G. It talks about inward supplies on which tax is to be paid on reverse charge mechanism. So in this 4G, only those transaction will come wherein you have paid the reverse charge in the financial year 21-22. So there may be a situation that a particular transaction relates to financial year 21-22, but you have paid the reverse charge in 22-23. That will not come in 4G. 4G will capture those transactions wherein the reverse charge has been paid in financial year 21-22. So there may be a situation that for financial year 2021, you had paid the reverse charge in September 2021 and claimed the credit in September 2021. So that transaction, even though that pertains to financial year 2021, but since you have discharged the same in 21-22, the same will come in 4G. There is a press release also issued by the government, which specifically says that in case of reverse charge, you have to go financial year wise. Then in table number 5, we have details of output supplies on which tax is not payable. Table number 4 was output supplies on which tax was payable. 5 is output supplies on which tax is not payable. 5A, B, C. 5A captures export without payment of tax. Then we have supply of asset without payment of tax. Then we have supplies on which the recipient has to pay under reverse charge. Say I am a goods transport agency. I am providing output supplies. My recipient has to pay under reverse charge. So I will report under 5C as a supplier of transport services. Then we have 4DE, 4DEF, which reports exempted supply, nil rated supplies, and non-GST supplies. The option is still there to club all together 4D, 4E, 4E, 5D, 5E, 5F, and report the same under exempted turnover. Friends, please note, it is very important to note that in last couple of years, what we have seen is that whenever we file our annual returns, department, what they do is that based on your annual return data, total ITC availed, they apply the formula themselves. They say that this is your exempted turnover total. This is your total turnover. Your ITC reversal should be total ITC into exempted turnover upon total turnover. And whereas what you have reversed is less. So we are getting many automatic generated notices by the department, which is based on GSTR 9. And in GSTR 9, they calculate the ITC reversal based on whatever is given in 5DEF. So we should always correlate whenever we are filing our GSTR 9, whatever amount we are showing in exempted turnover, we must see that we have done the proportionate reversal if it is required by the law. We have a specific case study on this topic itself, which I will be covering in next 10 minutes. Then we have credit notes, debit notes related to such supplies, which you can show separately or club together with this field. So whenever I fill my table number 4 and 5, based on 4 and 5, my tax payable get auto-populated in table number 9, subcolumn 2. I repeat, based on table number 4 and 5, the turnover which I show, the tax liability which I show, my tax payable gets auto-populated in 9.2. And my other columns, 9 subcolumn 3, 4, 5, 6, 7, it talks about payment of taxes, which is auto-populated through your 3B. In 3B, you have already paid the tax either through cash or through ITC. That's get auto-populated. So in an ideal situation, whatever is the tax payable in table number 9, your tax payable should match with your tax payments. So this is the best scenario, that your tax payment should match with the tax payable. If it is not matching, then in such a situation, we should have a reason why it is not matching. Why tax payable is more than tax paid, or why tax paid is more than tax payable. There must be a reason, and that reason should be properly recorded. And in an ideal situation, both of these elements should match. Moving on to table number 10 and 11. It refers to those transactions which pertains to 21-22 but have been reported in 22-23. Say you have made an amendment in 22-23. It may be an output amendment. It may be an downward amendment. So that will get reported in table number 10 and 11. So based on whatever turnover you are reporting in 10 and 11, your tax payable in table number 14 will get auto-populated. So, and tax paid, you have to write yourself manually, because system cannot auto-populate that whatever taxes are payable have been paid or not. So in an ideal situation, your tax payable under table 14 and tax paid should match. So that should be an ideal situation. Table number 9, my tax payable and tax paid should match, which is auto-populated from table number 4 and 5. Then in table number 14, which is auto-populated through table number 10 and 11, my tax payable and tax paid should match. This should be my ideal scenario. Now, these were the relevant tables of output supplies related to annual return. Let's move to what is 9C and what are the relevant tables related to output supplies. Friends, 9C is divided into 5 parts. The first part deals with basic details. Part 2 deals with your turnover reconciliation, wherein you have to reconcile what is the tax turnover as per the financial, and you have to reconcile the same with the turnover as per your annual return. So part 2 deals with your reconciliation of your turnover. You have to reconcile your output turnover, which is there in the financial, vis-a-vis which is there in your annual return. Part 3 talks about reconciliation of tax paid. So part 3 deals with reconciliation of whatever tax you have paid in annual return versus whatever tax has been paid as per your books of accounts. So these two has to be reconciled. Fourth part is my input reconciliation, ITC reconciliation. Whatever ITC has been availed in my annual returns vis-a-vis whatever ITC is available in my books of accounts, the both has to be reconciled. And then is the last part. So ultimately your 9C is nothing but your reconciliation of output and input from your books, from your financials, vis-a-vis whatever GST annual returns we have prepared in GSTR 9 format. Now in 9C, when we talk about part 2, reconciliation of turnover, table number 5 is the most important turnover table. 5.8 talks about turnover as per your financials. So here you have to write your turnover, which is there as per your financial. And in case you are having multiple registration number, in that situation, you have to write the turnover pertaining to that particular registration only. Say you are making GSTR 9 and 9C of dailies. Then in such a situation, you have to write vivisect that financial turnover as per at PAN level to state level. And you have to write what is my financial turnover as per my daily GST registration number. So that will come. We have to split this turnover. And whatever is the financial turnover as per 5A, that has to match with what is my GST turnover as per 5Q. This 5Q is an auto-populated figure, which is auto-populated from GSTR 9. Friends, in GSTR 9, table number 4, 5, 10, 11. These were the 4 tables. Out of this, from these 4 tables, my GSTR turnover is generated, which is auto-populated in 5Q. And then I have to match this GST turnover, which is there in 5Q, with my financial turnover, which is there in 5A. And if there is any gap, then I have to tell the reason of this gap, why there is so much of gap. When we talk about the reasons given, there are various reasons which are given in table number 5, and all these reasons are made optional. Very important to note that all these reasons are made optional. 5B, C, D, it all talks about various reasons which are available, by virtue of which there can be a difference between my GST turnover and financial turnover. And all these are made optional. And what they have done is that I can club all these reasons together and write the same in table number 5.4. I can consolidate the details of table 5B to 5.9 and report the same in 5.4. But practically what happens is that if, like, for example, your financial turnover is 1 crore, your GST turnover is 70 lakhs, and you write that my difference is on account of various reasons, and you write 30 lakhs in 5.4. So whenever you are actually undertaking a departmental audit, department always scrutinize this 5.4 in very detail. They always ask you what are the reasons of difference between financial turnover and GST turnover. So in spite of the fact that I may use this optional field for the purpose of preparing 9C, but I should have a detailed backup of 5.4, which should always be available with me. So let's discuss what can be some of the reasons. Why can there be a difference between financial turnover and GST turnover? Friends, you may note that even if there is a difference between financial turnover, if there is no difference between financial turnover and GST turnover, still there can be a dispute area. So matching of financial turnover and GST turnover does not mean that there is no dispute area. There can still be various dispute area. So now I will give various examples wherein some of the examples are where both are matching. Your financial and GST turnover is matching. There is no reconciliation gap. Still, there is a dispute area. Whereas there may be a situation when it is not matching, still there is no gap. Let me take few examples. Transaction appears in my books of account as well as GST returns. No reconciliation gap. There can still be an issue. For example, rate of tax, whether it is 5% or 18%. No reconciliation gap will come, but still there can be a legal dispute. Moving on. There can be a cases where a certain transaction is my books of account, but not in my returns. What can be the example? Say Ind AS adjustment. Ind AS adjustment will find place in books of account, not returns. So I should have that. Then therefore, there will be a difference in my financial turnover and GST turnover. I should have in backup that this difference is due to Ind AS adjustment. Similarly, stock transfer, cross charge, etc. If I have done stock transfer, I've paid GST. If I have done cross charge, I've paid GST. That will find place in my GST returns, but not books of account, because in books of accounts, these gets nullified. There will be a difference. That difference backup should be available to me. Apart from this, friends, there can be a situation where transaction is neither in books of account nor in GST returns. Still, there can be a dispute area. For example, transaction between related parties without consideration. One of the hot topic going on these days is corporate guarantee. I issue a corporate guarantee as a holding company to the banks on behalf of subsidiary company. DGI authorities in India is demanding GST on issuance of corporate guarantee between related parties. These never forms part of your financial turnover or GST turnover because you have not paid the tax, but still there can be an exposure. So whenever we are doing a reconciliation, we have to keep complete backup. Apart from that, we have to take care of other points also. Table number 7 talks about reconciliation of taxable turnover. So 5 was total turnover, 7 is taxable turnover. So out of this 7A, you have to remove the value of exemplary turnover, etc., and then reconcile the taxable turnover. Table number 5, total turnover. Table number 7, taxable turnover. Then we have table number 9, reconciliation of tax paid. Whatever is tax payable as per books of account, and whatever is the tax which you have paid as per annual return. So that is the reconciliation of tax paid. With this, we will now start the case studies related to output supplies. The first case study is what should be the source of data when I prepare this tables 4, 5, 10, 11, all these reconciliation. What should be the source of data? Should be GSTR 1 by books of account, GSTR 3B. So let me explain this with the help of example. In financial year 21-22, my GSTR 1 is 100. My books is 120. My 3B is 80 rupees. So my correct figure is 120. Whereas what I have paid is 80 rupees in 3B. Now I find out that there is less tax which I have paid. So how to represent the same in GSTR 9? In GSTR 9, what I have to show is the correct figure in table number 4A. In table number 4A, since in my example, the correct figure was as per books of account 120. So I will show 120. Based on 120, my tax payable will be 10.80, 10.80, and that will get auto-populated in table number 9. But what I have paid in 3B, I have paid 3B 80 rupees only. So my tax paid will come 7.20, 7.20. There will be a difference, and this difference you have to discharge through DRC 03. So the first principle is I have to report the correct figure in table number 4, based on which my table number 9 too will get auto-populated. In this example, since my tax paid was on 80 rupees, 7.20, 7.20 will get auto-populated from 3B. There is a differential tax liability which I will discharge. Moving on and taking this example further. In this example, my GSTR 1 was 100. My books is also 100. In 3B, I have discharged 80 rupees in 21-22. But now, while doing reconciliation in the month of October, you found out that 20 rupees there is a gap, and you rectify this 20 rupees in the month of September return. to September 2022 return period or October 2022 return period. So effectively, before filing annual return, you have rectified this mistake. You have paid this 20 rupees in 22-23. So effectively, in 21-22, your books is showing 100, one is showing 100, your 3B is showing 80 rupees. The differential liability is 20 rupees, which you have actually discharged in 22-23. In this case, you don't have to report 100 in table number 4. Please understand. In this situation, you have to report 80 rupees in table number 4A. 7.20, 7.20 will be the liability, which will get auto-populated in tax payable. Since in 3B, you had shown 80 rupees, my tax payment will also come 7.20, 7.20. Both will match. In table number 10, you have to show the remaining 20 rupees, that transaction pertaining to 21-22, which you have declared in 22-23. 10 rupees will come in table number 10. 1.80 will get auto-populated as tax payable in table number 14, and tax paid you have to write 1.80. So the conclusion is, if there is a gap between your books of account versus your GSTR 3B, and you have rectified the same in 22-23, then you have to prepare your GSTR 9 basis your GSTR 3B. That is, in this example, I have effectively paid the tax on entire 100 rupees, 80 in 21-22 and 20 in 22-23. Then report 80 above so that your table 9 matches. Report 20 in table number 10. Whereas in a previous example, where I had not rectified, I had only paid tax on 80, wherever my tax payable was on 120, then I will show the correct tax payable on table number 4A, which will get auto-populated in table number 9. Tax will be paid on 10.80. Auto-populated was 7.20. Remaining I will pay through DRC 03. Now let us move to our next case study. Next case study, very important case study, talking about the spillover effect. Now, when I am analyzing the 3B of 21-22, I came to know that I paid certain tax in 21-22 which pertain to 2021. I repeat, in 21-22, in your 3B, you have paid certain tax which pertains to 2021. How to show the same in annual return? There is already a press release. Press release says that, government press release October 2019, which says that you have to show the figures pertaining to 21-22 only in your annual return and not of the previous financial year. Accordingly, in our example, this 20 rupees which I have reported in 21-22, this 20 rupees is the amount which pertains to 2021, which I have reported in 21-22. This 20 rupees, which is there in your GSTR 3B of 21-22, but which pertains to 2021, you don't have to show in table number 4, because this is not a transaction which is related to your 21-22 supplies. So you will show 000. In such a situation, your tax payable will be 0, but payment through cash will be auto-populated. Your tax payment will be auto-populated through your 3B, which will show 20 rupees, 1.80 rupees as the tax paid. So there will be an excess payment of tax. So you have to write a remark. This excess payment of tax is on account of transaction, which is pertaining to 2021, which is shown in 21-22, and hence this excess tax payment is coming. Now let us move to our next case study. ICC paid CGST and SGST during 21-22, and later on it was found that IGST was payable. What to do it? The correct way is, please reverse whatever wrong credit you have undertaken and avail the credit of the correct tax, that is IGST. You still have the time to rectify the same till October 3B. Please prepare your reconciliations and rectify the same at the earliest possible. But what if you are not able to find the same in October return period and you are able to find this mistake? in November or December. What is the remedy which is available to me? In such a situation, the only remedy which is available to you is that if you have wrongly paid CGST and SGST credit, if you have wrongly paid CGST and SGST output liability, whereas IGST was payable, please pay IGST liability and take refund of CGST and SGST. So in your table number 4, show the correct picture. That is, show tax liability of IGST 200 rupees. Your tax payable will come 200 rupees in table number 9. CGST, SGST tax payable will be 0, but tax paid will be 100 and 100. So this is the way your table number 9 will show. In this case, pay 200 rupees IGST and then apply for this 100 rupees refund, 100 CGST, 100 SGST refund. That is the only mechanism which is available to us. Moving on to the next case study. You may recall in the starting we were discussing table number 5, which deals with exemplary turnover. In exemplary turnover, various amount comes. Let us analyze the implication of the same vis-a-vis ITC reversal. First, interest income. Interest income is an exempt service as per the GST law. You have to show under exempt turnover. But whether ITC reversal is required, I want audience to write in the chat box. If I have my interest income exempt turnover, will ITC reversal required? Common ITC reversal. Parag ji is saying no reversal. Everybody is saying no reversal. Absolutely. Interest income is not treated as exempted for the purpose of reversal. There is a specific explanation in Rule 42-43. What about dividend income? Is dividend an exempt turnover? Should I report it under exempt turnover and whether ITC reversal is required? I want audience to write. Why it is not an exempt turnover? And why ITC reversal not required if no? Any more views? Arvind is saying no, no. Parag ji saying but reversal required for securities turnover. See, dividend is not a consideration for any supply. It is a income which I am earning on account of ownership of shares. So it is not a consideration for any exempt supply. Since it is not an exempt supply, no reversal is required. However, trading in securities, trading in mutual fund is different. You have to reverse the same by treating exempt turnover as 1% of the sale of security amount. So 1% of the sale of security amount is treated as exempt income for the purpose of reversal. So you have to treat it as exempt income and reverse only the common credit which pertains to your security transaction. Interest, no reversal required. Dividend, no reversal required. But trading in securities, yes, reversal required. What will be the exempt turnover? If your 100 crore rupees is the sale of security, then 1% is your exempt turnover. That is 1 crore rupees. Similarly, there can be other areas, for example, sale of electricity, etc., where reversal is required. Always match your exempted turnover, calculate the reversal required as per the law. Whenever you are filing your annual return, whatever figure you are putting in exempted turnover, please ensure wherever reversal is required, you have undertaken the reversal. Moving on to the next case study. GSTR 100 rupees. Books of account 100 rupees. In my GSTR 3B, I have wrongly paid tax of 120 rupees. So GSTR 100 rupees. Books of account 100 rupees. In my GSTR 3B, I have wrongly paid tax on 120 rupees.
how to show the same in table number 4. What amount should I show? I want audience to write what you should show in table number 4. Narayan Singh saying 100, Shaba Singh is 100. Absolutely correct. So whatever is my correct turnover, that I should show it in table number 4. So table number 4 should always depict your correct number. 100 is my correct number. Tax payable 9. Auto populated 9. What is paid is 10.80. 1.80 is excess, and apply for this excess paid as refund. Whenever you apply for this excess tax paid as refund, they always check your annual return. So always have this excess payment of tax reflected in your annual return, so that at the time of applying the refund application, you are well aware that this is the statutory document which is available. Next case study is in financial year. What in last 21-22, what I have done is that there is a mistake. Instead of B2B, I have reported the same as B2C, or vice versa. I have done such mistake. What should I do in GSTR 9? Can somebody tell? Can somebody write? What should I do? So instead of reporting it as B2B, I report it as B2C, or vice versa. Of filing your table number 4, please show it in correct form, whether B2B or B2C in GSTR 9. Show correctly. That's it. No impact on taxation. Moving on to the next case study. Certain supplies not forming part of your financial turnover or actual turnover, GST turnover, like corporate guarantee, transaction between related parties. You have a common management, holding company providing services of common management and business support to subsidiary companies. So there are various related party transactions which are not captured in your books of account. Please identify and pay tax. Can anybody tell me, like, if a holding company is giving a corporate guarantee on behalf of subsidiary company to the bank, there is a GST implication, giving of corporate guarantee by one related party to another related party. How do we value it? Because this is the most happening issue going on these days. How to value corporate guarantee? What should be the valuation? Say the loan amount is 100 crore rupees. I have given the corporate guarantee. What should be the valuation mechanism? See, the rule is not very clear. What should be the... So one way is take whatever is the bank guarantee of the bank guarantee commission amount. Second is safe harbor rules under income tax that read 1% as the valuation. Further, there are certain income tax judgments which says 0.50 is the valuation. So there are various mechanisms which we have to see case to case basis. So it's an open issue which is going on. So identify all these transactions and please report in your 999C, even though this will not form part of your reconciliation. Having covered our output supplies, now we will drill down to the input supplies. Table number in GSTR 9, we have table number 6. Table number 6 deals with details of ITC availed during the financial year. 6A is auto-populated from your 3B. I have to bifurcate the same in 6B.
Hello, sir. Your voice is not audible. Sir, you're not audible.
Just allow me a minute. I'm just checking the connectivity. Allow me a minute.
Okay.
Table number 6, details of ITC availed during the financial year. 6A deals with.
Sir, you're not audible. I think there is some network issue because you're audible, but like not properly. Your voice is not clear, and sometimes we are able to hear you, and sometimes it gets muted.
Okay. Is it audible now?
Yes.
So table number 6, details of ITC availed during the financial year. 6A talks about total amount of input tax credit availed through form GSTR 3B, which is auto-populated. You have to divide this 6A figure, which is coming in your annual return, into 6B, C, D, E, F. This is the bifurcation which you have to undertake. 6A talks about auto-populated figure. You have to bifurcate the same. Now 6B, you have to show inward supplies other than reverse charge. Inward supplies, you have to bifurcate the same in inputs, capital goods, input services. Capital goods is mandatory. Input service and inputs can be clubbed. I repeat, capital goods is mandatory. Inputs and input services can be clubbed. Then in 6C and 6D, you have to report credit availed on reverse charge services. I repeat, credit availed on reverse charge services. 6B was forward charge services, which you bifurcated. 6C and D, you can club together and show the same in 6D. And 6C and 6D is reverse charge services credit. Then we have 6E, which is import of goods. 6F, which is import of services. Then I have ITC received from ISD. All these are mandatory fields. Then we have 6H, which talks about amount of ITC reclaimed other than B under the provision of Act. That is ITC claimed, reversed, and then reclaimed. That will have to be shown in 6H. So all these are my mandatory fields. Then we have transitional credit, which is not available. Then we have 6M, any other ITC availed but not specified above. For example, I've availed ITC on account of ITC 02. That will come in 6M. So table number 6 deals with all my inward details, all my ITC availed details. And please note this figure of 6B and 6H. I repeat, 6B forward charge credit and 6H is reclaimed credit. This figure is auto-populated in my 8B. This is 8B. This figure is auto-populated, which is matched with my 8A. 8A is nothing but a kind of a reflection of 2A figures. So this is my 2A versus 3B reconciliation concept kind of. 8A is different from 2A. We will study that. So we have to make sure that whatever I'm writing in 6B and 6H, that is getting auto-populated in table number 8B. So this is my table number 6, which is mandatory. These all are fields mandatory. Then we have table number 7, which talks about reversal. First is 7A, reversal on account of payment not made within 180 days. Then we have reversal on account of excess ITC. Then we have 42, 43 reversals on account of exemplary turnover. Then we have other reversals, etc. The law has given a provision wherein they have made all these fields mandatory and you can record all your reversals in 7H. I repeat, all the reversals can be recorded in 7H. Further, as per section 15.5, this E, the figure which you are reporting in your 3B, the value of 4D, which is not included in 4A, in your 3B, no entry is required to be made because there you are recording this figure only for information purpose. So all your reversals you can club and report in 7H, but I always recommend better to report each of the reversal under separate head so that there is no confusion later on. 8A is an auto-populated figure which you have to reconcile from 8B. 8B is nothing but an amount which is auto-populated in 6B. And if there is any difference between 8A, B, C, there can be a negative difference. So practically what we have seen is that whenever you see 8A, in 8A, table number 8A, there is always, this 8A is always different from your GSTR 2A. Because in 8A, there are certain transactions which is not there, but which was there in your GSTR 2A. So for example, supplier as GSTR 1 has been submitted but not filed. That will come in 2A but not in 8A. Return submitted after a certain period of time. That is coming in 2A but not in your 8A. So whenever there is a reconciliation gap, department always issues a notice that your 8 is negative. Your table number 8 is negative, hence pay this amount. So if reconciliation cannot be done properly, then please make a PDF, do your own reconciliation and put that PDF along with GSTR 9C, that how my invert data is reconciling with my 2A, 2B. So that reconciliation you can undertake. And then it is also important to note for this financial year, it is very important to note that what was applicable during this particular period of time was in financial year 21-22 till 31st December. What was applicable was GSTR 2A, and from 1st January 2022, what was applicable was 2B. So before 31st December, you had to undertake reconciliation based on 2A, and after 1st January 2022, you had to undertake reconciliation based on 2B. So 9 months 2A, 3 months 2B. So whenever you are reconciling and putting a PDF, please reconcile properly, taking into account 2A versus 2B gap also. So that is very important to note. So this is table number 8, which is related to my reconciliation. Then 8G deals with IGST paid on import and how much credit I have availed on import of goods. That is in table number 8. Table number 12 and 13 is optional, but very important. I always recommend to file the same, to fill the same. Table number 12 talks about reversal of ITC availed during the previous financial year. That is credit availed in 21-22 but reversed in 22-23. That will come in table number 12. Next is credit pertaining to 21-22 but availed in 22-23. That will come in table number 13. So this credit will come in table number 13. Though this is optional field, but we always recommend to fill the same. So these are the relevant table in annual return. Table number 6, 7, 8, then 12, 13. These are my relevant table. When coming to table form 9C, in 9C, what I have to reconcile in part 4 is reconciliation as per ITC availed in my books of account vis-a-vis ITC available in my annual return. So your figure 12A is ITC available as per your books of account, and what is the ITC which you have availed as per annual return, that is 12E, and you have to reconcile that this is the reason for difference. ITC booked in earlier financial year, claimed in current financial year, or vice versa. There can be various reasons. You have to give the reasons. The purpose is to reconcile why my books credit and annual return credit is different. With this, so this is the relevant table in case of form 9C. Now with this, we will start our case studies related to invert data. First is ITC taken in my monthly returns is 100 rupees in your GSTR 3B. So when you are preparing your GSTR 3B reconciliation with your books of account ITC versus 2A, you came to know that ITC taken in 3B is 100, whereas correct ITC as per the books was 90 rupees only. There was a clerical mistake which you made while filing 3B. What to do? 10 rupees is the excess credit. So when you are preparing your annual return in table number 6A, 100 rupees will get auto-populated. So in 6B, when you are giving the details and the bifurcation of your forward charge supplies, give the correct data. Give data of 90 rupees, which is the correct ITC. Bifurcate this correct ITC of 90 rupees into input services and capital goods. And then there will be a difference of 10 rupees, which will be shown as that this is the 10 rupees which you have claimed as an excess credit, and reverse this 10 rupees excess credit through your DRC format. So always show the correct data in table number 6B. So ultimate, the correct says we have to show and present the correct data which is there in my books of account in the GSTR 9 and 9C format. In fact, I will give you an example of a recent High Court judgment of Bombay High Court. In that case, what has happened is that a particular taxpayer had forgot to report the export transaction in their monthly GSTR 3B, and accordingly his refund was denied since export turnover was not reported in GSTR 1 and 3B. However, the client had reported the same in annual return. The Bombay High Court held, please look at the annual returns. If the taxpayers have reported the turnover, export turnover in annual return, please follow that. He has declared it that there is an export of this much of amount in the annual return, even though the same was missed in GSTR 1 and 3B. So that is the importance of your annual return. Always show the correct data. The principle which you have to keep in mind is the correct data I have to show in annual return. And even if there is any gap in presenting any of the scenario, please write your comment in 9C that this situation I have represented in this manner. This situation I have represented in this manner. Next issue is ITC of 2021 reported in 21-22. So there may be a situation that in 21-22, there were in your 3B ITC, 100 rupees of ITC is coming in, which is pertaining to 2021. So in 21-22 3B data, 100 rupees of ITC is of the financial year 2021. What do I have to do? As discussed for the output supply, I have to report the correct figure. Since this ITC does not pertain to your 21-22 figure, you will not show this ITC. So how will my table number 6 look like? Very important. This everybody has to listen very carefully because everybody will face this issue. Your 6A will get auto-populated by 100 rupees because it is auto-populated through your 3B. 6A will get auto-populated 100 rupees. Now, is this 100 rupees your 21-22 credit? No, it pertains to your 2021 credit. So you don't have to show the same in 6B. Your 6B will come 0. Your 6B will come 0 and accordingly there will be a difference of 100 rupees. Please write your comment in 9C that this difference is on account of the fact that I have shown this 2021 figure in 21-22. I have shown this 2021 data, ITC data was shown in 21-22 3B and accordingly this difference is coming because what we have reported in 6B is only 21-22 data and not 2021 data. Write a comment, write a proper comment in your GSTR 9C stating that this difference is on account of this reason. And what will get auto-populated from 6B will get auto-populated in 8B. Your 8A in any case will be 0 because this will not come in your 21-22 8A. This transaction is a part of your 2021 8A which had come earlier only in the previous annual return. So your table number 8 will match. So in your 6B, report only 21-22 transactions, not ITC pertaining to 2021, which you have availed in 21-22. Very important concept to keep in mind. Press release already given by the department. Next case study is negative output supplies due to excess credit notes. So what I have done in 3B is that my credit note was more than my output turnover. So in a particular month, my output turnover was 30 lakhs, my credit note was 70 lakhs. So 40 lakh was excess credit notes. One way is 3B you will file 0 and you will keep on adjusting this excess credit note balance in your future 3B. If it cannot be adjusted, then you can go and file refund. There is already a circular stating that in case of excess credit notes, which cannot be adjusted through your 3B liability, you can file a return. But what some taxpayers have done is that they have claimed the ITC of the same. So in my particular return period, my credit note was 70 lakh rupees. My output tax liability was 40 lakh rupees. So my 3B should be filed 0. And this 30 lakh excess credit note I have to adjust in future 3B. Few people, what they have done, instead of adjusting, they have claimed the ITC in GSTR 3B. Is this practice correct? Can somebody write that if my credit note in a particular month is 70 lakhs, my output liability is 40 lakhs, 30 lakh is the excess credit note. Can I adjust it? Aditi saying no. Everybody saying no. And this is the mistake which many of us have done. So we always recommend that if this is the kind of situation, please rectify the same. IT is not available. You have to apply for the refund of the excess credit note. And if you have claimed the ITC, please reverse this ITC. ITC cannot be claimed. Very important, last important case study. Then we will take up the question and answers. RCM liability of 2021 paid in 21-22. So RCM liability of 2021, which I have paid in 21-22, I have to report the same in 21-22 in table number 4 and take the credit of also show the credit of the same in table number 6. However, if there is a reverse charge entry of 21-22, which I have done in 22-23, I have paid the reverse charge in 22-23 and also taken credit in 22-23. No need to show the same. Already there is a press release dated 3rd July, which says that in the financial year in which you have reported, you have to show the same in that particular annual return. Very important concept to note. With this, we end our various case studies session today. So before we move on to the next part, the software part and the question and answer, the important point which I want to highlight is that please treat this as an opportunity to rectify whatever mistakes you have undertaken, please do all the reconciliations in the month of October is feasible. Accordingly, rectify the same in annual return. If not rectified, then please report the same properly in your GSTR 9 and 9C. And while reporting, if you feel any gap, see, there is no hard and fast rule. Always put a comment in 9C that this transaction I have reported in this manner. This transaction I have reported in this manner. Give a clear picture in your annual return. With this, we end our session. Over to you, Nikita. Thank you.
Okay, thank you so much, sir. Thank you so much for sharing such insightful information on how to prepare GSTR 9 and 9C. So now with that, we will have a look at how we can, generate GSTR 9 and 9C through our WebGST software so that it can be prepared in a very easy manner. So the people who are already our clients and who know how our software works, so they must be knowing that the basic concept of GSTR 9 and 9C in web GST software is you just have to prepare a business vertical, that is your vertical for which you want to file your GSTR 9 and 9C. And once you have prepared that, like entered the basic information, after that you can do any working on that particular business vertical. Either you can file your GSTR 1, 3B, then you can download GSTR 9, you can work and on GSTR 9 and file it. So now today I'm showing you how to, like, you can download your GSTR 9 data in WebGST software, and accordingly how you can work in that. So you can on the top of the screen you can see the GSTR 9 and 9C tab is coming. First of all, we have to select the GSTN for which we want to prepare GSTR 9, and after that we will click on GSTR 9. So the basic important point is, in case of GSTR 9, we are not capturing any data from the data you have entered in our software. Means like if you are an existing customer or you are a new client, it doesn't matter. You can prepare GSTR 9 and 9C from WebGST irrespective of the fact that you have entered any data in the software or not, because we are capturing all the data from our GST portal, which we have reported on GST portal, like when we have filed our return. So here we have two options, GST and API service and direct. One works on the basis of OTP and other works on the basis of like directly through captcha. Okay, so when I'll click on this, you can see on the screen, we are actually downloading the data for like the whole year, and for the next year, 6 months, we are downloading GSTR 3B, then 1 and 2A. So first of all, we are going to the portal and we are downloading all the data which is available in your GSTN on the GST portal, and we are not using any data in the software. Now you can see here that in green color it is showing that the data is downloaded. So after that, if you'll see on the screen, you can see that the form is same as it is available on the GST portal. It is exactly same, and the data is getting populated on the basis of the returns which we have filed. But the excess benefit, extra benefit which you will be getting through software is, like here on the GST portal, the amount gets populated, but there is no bifurcation for that how this amount is calculated. So through the help of software, you can just click on the left hand side, you can see the buttons are coming. If you click on this, you can see that how this data is getting formed. So basically the task which we have, the major task for calculation which we have, that how this data is calculating, will be resolved with the help of software. Similarly, in B2B case, if I'll click on this, I can see my monthly data. And for like suppose July month, I want to see that how many parties have filed invoices, for how many parties I have issued the invoices. So I can see like party wise data also by clicking on here. So I can see the number of parties I have, then invoice wise data, then month wise data. So all these kind of bifurcations are available with me, and I can check my data on that basis. So it is getting the party-wise data right now. So it will be the data will be divided on the basis of number of parties. So you can see here. So it's loading till now. Actually, the data is very heavy. So that's why it's taking some time in getting downloaded. So yeah, so till the time it is getting downloaded, I can tell you that the data will be downloaded and bifurcated on the basis of party-wise, invoice-wise, and month-wise. I can see whole data and I can export that data to my Excel also. So this is the feature which you will be getting in the software. Yeah, so I am sharing my screen again. There was some issue. Now, after seeing this data, we next is us basic the problem when we face is basically in reconciliation of our GSTR 2A and GSTR 8A. Although the feature is now available on the portal also, that we are getting the Excel file. Like we can see the Excel file in which we can see that what data is there in my GSTR, like if, what data is getting auto-populated in 8A, but then also if we'll match that particular data with the GSTR 2A, then also we get some differences. So can anybody tell that what is the cause of that differences? Can anybody just tell us? So, so let me tell you that the main cause of the difference can be that our Excel of 8A is formed on a particular date, suppose 31st October. So it will be generated on 31st October itself. So there may be some cases when you download your data after, like your return is filed after this particular time period by your vendor. So what will happen is it will be reflected in your GSTR 2A after that also, but it will not be shown in your that 8A Excel because it is already downloaded. So in that particular case, it can happen that there is difference between in your 8A and GSTR 2A also. So in for this particular reason, what we have done is in table number 8A, you can see this particular data. Just a second, you can see over here in 8A, there is a data that data as per GST and 8A is coming over here and 2A is coming over here. And the difference amount is also shown, and what invoices are not included is also shown over here. So you can see that the reasons are also coming, that why this particular data is not coming. And below you can see that for first to 22 serial number, these are the data which may be for reverse charge or where POS lies in the state of supplier. But like last 5 invoices, if you can see, they are those invoices which are not found in GSTR 980. And the major reason for that could be that the return was filed late. So that's why it is not coming in my 8A, but it is coming in my 2A. So that can be the major reason of difference. You can find out through the help of the software. So this facility of viewing the data, bifurcation of the data can be seen in on click of every button which is given on every head. So you can see from here. With that, you can like after entering all the data and making changes which you want to make manually, you can save the like return from the software and file it by clicking on save JSON, and your data will be uploaded from here only. So the major benefit of filing the return through the software is, one, you can see the bifurcation, and another one is on right click. On every right click, you have an option to enter any comment. Suppose you are making any changes manually, and now after 5 years you want to see that why I've changed this particular amount. So in that particular case, if we have entered any comment, so it will be stored over here in the software, and we can like come back and see why this data is changed, what was the reason. So these kind of facilities will help us to have proper record afterwards also. With these, we have like other facilities also, like you can check instructions for filing the data, then you can export it. We have some help videos. Then below the screen, you can see the calculation of tax payable. So we have certain forms, like we have certain, this is a summary that how we are calculating the data. So these kind of facilities are available, and you can easily file the return with the help of the software. Similarly, in 9C also, we are getting the data, and you can make the changes and you can file with the help of software itself. Now, this was about like brief information about how to file return with the help of WebGST software. Now, I think, sir, we can take questions.
Right. So let us take the question and answer, which is there in the chat box.
Yes. So I can read it out for you if you want.
Sure, sure.
Yeah. So one is, sir, can I reverse ITC of financial year 21-22 in September 22 month? And what is treatment in GSTR 9 regarding this issue? It is by Ranjiv Pratap Singh, this question.
Yes, definitely. You can reverse the credit of 21-22 in September 2022. So in fact, you can also reverse the same in October 2022 return also. And in such a situation, whatever amount you have reversed, you have to specifically show the same in annual return. And in annual return, there is a specific column. What we have discussed is also ITC table number 12 of GSTR 9. So reversal of ITC related to 21-22, which you have done in 22-23. You can show the same in table number 12, though this is optional, but it is recommended to show the same in table number 12 of GSTR 9.
Okay. So next question is invoice pertaining to 2021, but goods or services received in financial year 21-22, where to report in GSTR 9?
So goods pertain, can you repeat the question, please?
Invoice is pertaining to financial year 2021, but goods or services are received in financial year 21 and 22. Where to report it in GSTR 9? I think goods in transit case.
So this is the case of goods in transit, wherein invoice is pertaining to 21-22, but the goods have been received in 22-23. So effectively, what you have done is that you have claimed the credit in 22-23. Since this is the invoice pertaining to 21-22, for which credit is taken in 22-23, you can report the same in table number 13 of GSTR 9. Table number 13 is optional, but still it is recommended to report the same in table number 13. Further, you may also know that whenever you are filing your GSTR 9C, table number 12 of GSTR 9C, in that the impact of the same has to be taken in that particular table number 12 also, because in table number 12, there are various scenarios which are covered. Like this will not form part of your books. So what will happen is that this figure will not form part of your books of account. Similarly, this will not form part of your 3B of financial year 21-22. So accordingly, whenever you are filing your table number 12, please keep this in mind while preparing table number 12. So the answer is yes, show the same in table number 13 of GSTR 9.
Okay. Okay. Next is please advise on RCM paid this year of last year. Whether we can claim ITC for that.
Yes. So in fact, there are two parts to it. One is the government itself has extended the date of claiming the ITC till October return period. So any ITC related to 21-22, any reverse charge you pay now, claim credit, the government has already extended it to October period. Furthermore, even after October, say if you want to pay in December month and claim the credit in December month, in that situation, in our view, the time limit of availing credit in case of RCM will not be applicable. In RCM, there can be two situations. The vendor is registered, the vendor is not registered. If vendor is not registered, it is the self invoice which you make, basis which you claim the credit. So even if in December 2022 you pay RCM, you will be able to claim the credit. But in case the vendor is registered, in that situation, you claim credit on the basis of registered vendor invoice, and that you should do before October 3B return period, maximum by October 3B return period.
Okay. Next is, sir, is it mandatory to provide HS and SSC wise details for outward supply and inward supply in GSTR 9?
See, this time they have made the law mandatory to provide HS advice detail for your output supplies. For inward supplies, it's still optional. For output supplies in table number 17, you have to provide the same. And you have to provide it till 6-digit level if your turnover is more than 5 crore and 4-digit if less than 5 crore.
Okay. Next is it advisable to file return if my turnover is below 2 crore?
See, it is optional to file return, but if you have done certain mistakes and you want to rectify the same, it is advisable to file GSTR 9 if you think that in GSTR 9 you want to present certain data in a more appropriate manner. For example, you have missed out to report certain export transaction, you have reported wrongly B2B as B2C or vice versa. If there is something to correct, rectify and show the correct figure in annual return. Otherwise, it's optional.
Okay. Next is, in the case of giving corporate guarantee for subsidiary company, there is no cost to the holding company. Can the holding company take only a nominal amount as a cost of supply to subsidiary company?
The valuation is a very big issue in case of giving of corporate guarantees. See, it's not about taking the cost involved in giving the corporate guarantee. The cost has to be seen vis-a-vis the risk which the holding companies take for providing the guarantee. Down the line, if subsidiary company does not pay, the entire liability is on the holding company. So the amount of risk, the consideration is directly relatable to the amount of risk which the holding company is taking. There may be a case where subsidiary company balance sheet is very strong. There the risk is less, the corporate guarantee valuation will be very less. There may be case where subsidiary balance sheet is very weak. And that case, the risk will be more. Accordingly, the valuation will be more. And in income tax, the general principle is 1%. And there are various income tax judgments which drill down and say 0.50 should be the criteria. We cannot fix any criteria. It has to be seen on case-to-case basis. But that argument will not dwell if we say that my cost of providing the service is minimal, so I will charge a very minimal amount, because your charges will also include the risk which you are undertaking.
Okay. So next is whether the assessment or audit of ITC would be based on GSTR 2B or table 8A of GSTR 9.
See, these days what we are saying is, whenever we are seeing 8A, see 8A, they have the unique thing in 21-22 is that first 9 months was 2A. The remaining 3 months was 2B. And now when we prepare annual return, it is 8A, and 8A itself gives its own summary. So the correct way is to prepare the reconciliation based on 8A. But sometimes it becomes difficult. In that situation, the reconciliation which you have prepared using 2A, 2B along with your 3B, that you can attach as PDF. But the best way is to prepare reconciliation using the 8A backup, which is available on the portal.
Okay. So I think practically this is going to be a difficult task for everybody, because we now have to check 2B also with 2A. Earlier, like till last year, we were only checking 2A, 3B. Now this year we have 2B also. So I think we have a lot work to do in this regard. Yes. So moving to next question, whether negative figures would be disclosed if the value of table 8B plus 8C is higher than table 8A, or should we disclose 0?
See, if your 8B and 8C figure is higher than your 8A, negative figures will come, and you eventually basis this only the department is issuing the notices. So it is always advisable to put a PDF reconciliation there, like how my 2A versus or 2B versus 3B data is matching. Put that reconciliation in PDF format. Otherwise, this is the biggest issue which the industry is facing.
Okay, so next is, sir, we have audited the books for annual return, and in inward repo on RCM, we have found that approximately 20,000 payment is pending for claim in RCM and also pending for payment. So what we should do in this case?
Better to pay the same in your October 2022 3B, pay RCM, take credit also in October 2022. Since you have paid the transaction in October 2022, paid the RCM in October 2022, claim credit in October 2022. Accordingly, you need not show the same in annual return of 21-22.
Okay. ITC in GSTR 2A in 2021, but in book in 21-22. In 2A it is coming in 2021, but in my books it is coming in 21-22. So what should be
So what I understand is that in your 3B also you have taken in 21-22 only. In your books also it is coming in 21-22 only. Whereas
in I think
in 2A it was
GSTR
2021. It is in
yes.
2A it was 2021. So first of all, I assume that in 2021 annual return, whenever you were filing, since the invoice pertain to 2021, but you have taken the credit in 21-22, you must have disclosed the same in table number 13 also. So one is the assumption which I am making, that while filing 2021, you have done this. Now, what will happen is when you are preparing the details of 21-22, since the invoice, you have claimed the credit in 21-22. So what will happen is that in your table number 8B, this figure will show, whereas your 8A, this figure will not show. So there will be a difference gap. So that's why we are saying this will result into a difference in your 8A and 8B reconciliation. So that's why we are recommending that please attach a PDF and write in that PDF that this difference is on account of this reason. ITC was in 2A of 2021, whereas my 8B figure shows 21-22 credit. So attach that PDF there. You have to make sure your 8A, 8B, 8C reconcile.
Okay. So is it mandatory to provide expense-wise details in GSTR 9C? Oh.
So can you repeat?
Is it mandatory to provide expense-wise?
No, it is optional. It is optional.
Optional?
Yes.
Yes. Okay. HSN of sale summary is also included. RCM HSN. I think he means to say that RCM, the HSN is also to be included in HSN of sale summary or not.
So it logically should be included, but I have to check in and we will get back to you on this.
Okay, so we'll Nitin ji will like definitely revert you back after like confirmation. Okay. So next is, what is the difference in the reporting requirement in 9 and 9C of financial year 21-22 as compared to previous financial year?
See, there is not much difference. Earlier also, like there was no requirement to get it certified from a chartered accountant. The same thing continues this time also. So in fact, it's not about the requirement of giving any comment, etc. Our endeavor is that whatever the way we are preparing GSTR 99C, at the time of preparing various tables, you will find various gaps and you will present the data in one manner, that you will take a call that I will be presenting data in this manner. This data is presented in this manner. So wherever that commercial call is taken, please disclose all this method of presenting your data and spillover effect of various financial years properly in your comment section, so that anybody who sees annual return and 9C, he gets a clear picture of how the data has been presented, which will result into a proper disclosure from our side.
Yes, I think, sir, there are some changes like earlier in case of non-GST exempt and nil rated, we could have reported all the one in exempted table. Now non-GST is to be reported like differently. I think
okay, that type of reporting, I thought the declaration part is asking that we have already discussed during our course. Like for example, now capital goods is mandatory. Input and input services can be clubbed together.
Yes.
All these things what we have discussed during the course in the tables itself.
Yes, we have already discussed. So you can go to our channel and you can.
And we will share the PPT also, which will write what is mandatory, what has to be disclosed, what not has to be disclosed.
Yes.
I thought about the comments, etc., which has to be made.
Whether exempt sales like petrol is also required to be shown in HSN summary.
See that the 9, if you see the form 9, the conditions and the terms and conditions which is given below, the instructions to fill, it says no supplier is also required to be shown. So that is very wide enough. This has to be shown in table number 5 DEF.
Okay. So if anybody is having like other questions, they can put in our comment section. Otherwise, I think that's like all for the day. We had a very great session and we had like we have shared the like a very insightful
Sorry,
information
I think
is.
his question was, I think HSN summary also we will recommend to put it, because ultimately what they will do is that they will see your turnover in table number 4 and 5 and try to match it with your HSN summary.
Yes.
So make sure your HSN summary reconcile with your 4, 5, 10, 11 data cumulatively. So that is the logic which is been built in the system. So better to show it. Yes, Nikita, over to you.
Yes. Yeah, thank you, sir. So I think the major crux of this session and what we have, like what I was able to conclude was that in case I am having any issue, or I am calculating where my ITC is not matching, or there are some kind of difference, so sir has suggested that we should prepare its reconciliation and upload it so that like it can be checked and there will be no issues in the future. I think that was the major highlight which we can do in because generally when we are practically filing the returns, we do face some issues where we are not sure where to report it. So I think in that case we can do is we can prepare a reconciliation and upload it with our return. So there will be no confusion at the department's ends also. So yeah, thank you so much, sir. It was a really good session. Thank you so much.
Thank you, Nikita. Thank you, audience. Thank you, everybody. It was a nice session wherein we got a lot of queries, etc. And it's always good to have an interactive audience. And we'll
Yes.
be sharing the PPT also.
Yes, we'll be sharing the PPT soon after the session.
Thank you. Thank you,
Thank you.
everyone.
Thank you.